So, welcome to Risk Management in Agriculture, the Train the Trainer program. Today, Bonnie Lind is going to be speaking to you about crop insurance. And with that, I'm just going to turn this straight over to her. So, Bonnie.
So I'm going to be talking today about crop insurance for Hawaii growers under the USDA's Risk Management Agency program. I'm going to be focusing on the Hawaii tropical fruit and trees and the macadamia nuts and trees. This is from cropinsuranceinamerika.org, and it just basically covers some basic ag statistics. I'm sure you're pretty well aware that Hawaii crops contribute a lot of money to the economy. And they're showing the top crops as coffee, macadamia nuts, and floriculture. We do also have a nursery program, not a floriculture per se, but a nursery, wholesale nursery program. A little bit of history on crop insurance. These slides, if you want me to skip some of these, just let me know. But crop insurance in Hawaii really didn't begin until the 1980s. Crop insurance as a program started in the 1930s. The nursery insurance program didn't really take off in the 1980s, so it's kind of relatively new to a lot of growers in Hawaii. So I'm really excited to hear that you guys are going to be participating and getting information out to growers. It's amazing to me when I go to Hawaii how many growers have never heard about crop insurance. So the MacNut program started around 1997, and then let me see, 2007, the Hawaii Tropical Fruit Policy became available in Hawaii as a pilot program. And it covers coffee, papaya, and bananas. And it also was released alongside it along with the Hawaii Tropical Tree Policy. AGR later, which is kind of a whole farm revenue policy, and it was replaced in 2015 by whole farm, and that's what Shannon covered last week. And then in 2019, the Tropical Fruit Policy became a permanent program, which means we can do some extra things that we can't do in a pilot program. So it actually got the vote of confidence from the Risk Management Agency to remain a program that's offered in Hawaii. Another slide from Crop Insurance in America shows the amount of coverage that crop insurance provides in Hawaii. And these are a couple years old, 16,600 acres, and provides 125.3 million in protection. Farmers paid close to $500,000 for insurance coverage, which means they cost share. They're paying a premium for their coverage. And then we paid back to growers $1.2 million to cover losses. And I believe that was for the 2019 crop year. Crop insurance crop insurance can help growers protect against the risk causing crop and revenue losses resulting from adverse weather, uncontrollable insects and disease, wildlife and wildfire, earthquake, tsunami, volcanic eruption, and the failure of irrigation water supply due to any one of those causes. The removal of diseased trees when authorized by the insurance company, that's actually the next slide. Yeah, the destruction of trees to control a couple of diseases is covered under the tree side of the policy for bananas and papaya. And there's specifically those two viruses that are covered on those crops. And coffee trees may be removed due to nematode infestation that's reached 50% and has caused 40% reduction in cherry for the 2 previous years. So those are the only instances where tree loss, chainsaws to the trees are covered basically. Under some programs, crop insurance can help growers protect against losses due to market conditions. For example, a market glut due to inconsistent growing conditions. We've had that one year where it caused the price to be driven downward because the crop all became ripe at one time, or a missed market due to poor weather. No coverage is provided against damage caused by a person that affects the yield, quality, or price of the crop. So if you're not following good farming practices, you're not covered. If you're farming a crop behind a water containment structure and it floods, your farm isn't covered. And there's no coverage for theft or vandalism. So crop insurance allows participating growers to project a minimum amount of production and income based on insurance guarantees. So this gives them an accurate basis for projections that are necessary to prepare annual budgets and secure operating costs, helps growers plan for the future. Provides an additional security for operating loans by assigning crop insurance benefits to lenders. Bankers love that. They don't always require it, but they do in some cases, and they do like to see that crop insurance is covering part of their risk. And policies can be used to repay loans in the event of a loss. So just to summarize the importance of crop insurance, when crop losses hit, it helps keep farm families and in the business of farming and corporate farms as well. It stabilizes the local economy beyond the farm gate, helps make progress toward food security, and helps keep farm families contributing to the local economy. So what does it cost? The USDA's been committed to making the cost of crop insurance affordable. They've increased subsidies over the last 20 years. And on the average, USDA pays about 60% of the premium cost. And that's some data that came from the RMA. There's a premium plus an admin fee, and premiums are individually determined by the grower based on their crop, county, coverage level, average yields, tree counts, or age of trees. So it's highly individual. Subsidies help growers with the premiums. And then the fees are $30 for admin fee for a buyout policy and $655 for catastrophic coverage. I never recommend catastrophic coverage unless their farm is large enough to have a premium that exceeds that $655. And I usually don't recommend it even then, because it's just a very low catastrophic coverage level. Veteran farmers and beginning farmers and ranchers can receive fee waivers and additional subsidies on their premiums. And the limited resource growers can just request admin fees be waived. And so an agent can quote the individual premium for a grower's farm, and a farmer or an agent could go to the RMA USDA.gov's website and use their cost estimator to come up with an estimate. Most insurance providers have quoting packages that help us quote the crop insurance policies and present the quotes in a easy to look at format. So the cap policy, here it is with the little red wedge representing 27.5% of the insurance value of a crop, and that's what cap coverage covers. It's a 50% deductible and a 55% price factor when a loss is triggered. It costs $655, but there's no additional premium. The 75% coverage level is the predominant high level of coverage in Hawaii. If you look at across all the crop insurance programs, there are some programs where you can insure up to 85%, but 75% is the main high point of coverage, meaning that there's a 25% deductible, and the premium is payable along with the $30 fee. Most policies, like I said, guarantee up to 75% of an approved yield, the dollar value of trees, the nursery inventory insurance value if you're looking at nursery insurance. And on a whole farm policy, it would be up to 85% of the approved gross revenue for diversified growers. So types of coverage on the three or four crops that we're focusing on. There's a production guarantee side that covers macadamia nuts, coffee, cherry, bananas, and papayas. Coverage is based on an approved yield from the grower's yield history or transitional assigned yields that are provided to us by the risk management agency, and there are minimum age requirements. For the fruit and nut insurance, coffee cherry isn't insurable until the trees that the cherry is produced on has reached age 3 prior to the crop year. The crop year begins for coffee on January 1. Papaya, have to be 12 months old by May 31st prior to the crop year, which begins on June 1, or they can be insured at 9 months under a special request that we submit to the risk management agency for approval. Papaya trees are not insurable if they have reached age 4 before the insurance period, so they also age out. And then bananas. Bananas also have a June 1 attachment date, so they have to just be planted before May 31st. And then the banana fruit is insurable. Macadamia nuts have to reach the 5th growing season by the January 1 of the insurance period, which is the beginning of the insurance period for macadamia nuts. So here's an example of an approved yield for all these crops. This is actually numbers I put together for coffee cherry. It shows a 4-year history in this 5-year grid. And generally we start with 4 years as a minimum. We can go up to 10. If a grower has 10 years of actual they want to provide, we can go up to 10, but we need a minimum of 4. So here's how we would develop a 4-year average for a grower who has 3 years of actual. We show his 3 years of actual for the most recent 3 years. And then we plug in a transitional yield for that 4th year in the history. And in this example, we have an average of 6,255 pounds. So the way we would determine the coverage is we would take that 6,255, and if the grower selected the 75% coverage level, the guarantee per acre would be 4,691 pounds. We would multiply that times the acres in the farm, and that would be net acres in production. And that would be the total guarantee for the farm, in this case, 31,275 pounds. To take that to the next step, a loss determination would be calculated by looking at the guarantee for the farm and subtracting from that the actual production that was harvested for the year, or 20,000 pounds in this example, showing a loss of 11,275 pounds, price selection of $1.80 times that 11,275 pounds, and a share of 100% gives the unit indemnity of $20,295. The price selection for coffee this year is actually $2 and 5.7 cents per cherry pound. So this is an old slide, I think. I didn't update it. So on the tree-based side, we have tree policies for coffee trees, bananas, papaya, and mac trees. The coverage is established based on a tree count, the age of the trees, and the per tree price selection based on that age. And then the trees have to meet minimum age requirements. For coffee trees, they just have to be planted by December 31st prior to the January 1 attachment date. For papaya trees, they have to be 12 months old on December 31st prior to the attachment date, or with that special request, 9 months of age. So that's similar to the fruit policy. And then again, papaya trees are not insurable if they've aged out and have reached age 4 before the insurance period. Banana trees only have to be planted on December 31st prior to the January 1 attachment date. And then macadamia trees have to reach age 1 by January 1 of the insurance period. So mac trees have to have 12 months minimum of growing before they're insurable. So here's an example of how we determine the amount of insurance. In this example, there's 500 trees, a price selection of $40.30. And this is, again, this is a coffee tree example, but it works similarly for each of these crops. There's a price selection per tree, and then we multiply that times the tree count to come up with the value of insured trees, multiplying that times the growers' selected coverage level of 75% in this example, because that's the maximum coverage, giving that grower insurance value of $15,113. This is an example of a loss based on another. This is a coffee example. So here's this is the first step in the determination of the loss. It's how we determine the insurance value, and then we compare the value of the dead trees to that. So we have 300 dead trees in this example, with a value of $12,090. We divide that number by the overall value of insured trees of 20,150, come up with a 60% loss, and subtract from that the deductible for 75%, which is 25%. And we have a payable loss of 35% multiplied times the value of insured trees, and giving us a gross indemnity of $7,053. There's a dollar policy, and it's nursery commodity insurance, wholesale growers only. I wasn't asked to talk about this, but I think there's only one slide. There isn't a lot of participation, but there's a lot of interest. And so I would say it's a little paperwork intensive, and some growers don't want to go through the process of applying. However, I have met motivated growers, and we work together to get their policy in place. And it's possible. We can write nursery insurance in Hawaii. It seemed impossible at a time, but growers are interested. This just shows inventory value on a nursery example and the coverage level determining the amount of insurance for the farm. Similarly, it's similar to how we make the tree claim. We compare the amount of insurance to the value of the trees, and the value of the insurance, the field market value after the loss, and remove the deductible, and that gives us the payable. There are other types of coverage. There's a livestock risk protection. There's also a dairy revenue protection right now. Here's the whole farm protection. It basically is a catch-all for farms, for crops that aren't covered under named policies, like we were just discussing. It covers all the crops that are generating income. Okay, as far as qualifying for the subsidized premiums, highly erodible land conservation and wetland conservation compliance certification have to be in place. Grower has to certify with the Farm Service Agency or with the NRCS that they are compliant with the requirements, or they are participating in crop insurance if that's the only program that they are participating in. So there is a shortcut for perennial growers who are participating in crop insurance only as far as USDA programs are concerned. Everyone has to be crop insurance subsidies. Most growers have until August 15th following their sign up to get compliant if they aren't currently, and premiums can double if they're not compliant by that date. So it's really important that growers talk to the Farm Service Agency and make sure their certification is updated. Here's an example of that form. I've circled on the form the box where growers can check if they are participating just in crop insurance. It's very simple. If that's all they want to do, they check that box B and sign page 2 and provide some contact information to the Farm Service Agency, and that pretty much certifies them. When I talk to growers or grower groups, there's a few main objections, and one is that it's too expensive. Another, and that's usually based on hearsay. Another grower will say it's too much paperwork, and some don't want government in their business. So to too expensive, I would say it's not a one-size-fits-all type of premium. It's tailored to fit coverage and budget requirements. Small farmers may only have a $30 fee plus a low premium, especially if their farm is small. The premiums don't get crazy on lower acreages. Beginning farmers and limited resource growers can have fees waived. Beginning farmers and veteran farmers receive additional subsidies. And larger farmers can keep costs down with that cap policy and just pay a cap fee if that's what they want to do, just to get some coverage in place. And regarding the complaint that it might require too much paperwork, crop insurance policy setup is usually pretty simple, and it does require a certain amount of paperwork. Some policies are more than others, especially the whole farm policy. It's paperwork intensive, and so is the nursery policy. But the named crop policies are fairly simple and straightforward to write up. And experienced agents are trained to help growers get through that paperwork. And if you don't like government in your business, really, most of these programs require significantly less disclosure on forms than a tax return does. So the payoffs for growers to keep in mind are that they are managing risks and weathering the storms and crop losses, and they're not reliant upon an ad hoc type disaster payment. They know up front what their coverage is, so they can make plans and expand their operation or meet other goals. It helps provide economic stability of the community, gives a grower peace of mind, and helps a grower to keep growing. Crop insurance supports farms. Farms staying in business helps farm families and communities, local shops and businesses. And subsidies help ensure growers keep costs down. Growers can use their policy as collateral for operating loans and expansion. So that's a valuable tool when walking into a bank. This is a grid that shows the type of coverage, And I'm providing the PDF, this presentation in PDF format, so this will be included in that. But it just shows the types of programs that we have available in Hawaii. And I didn't include dairy risk protection information. It's actually got a rolling deadline, just like livestock. But I was told there's only 1 or 2 dairies, and the livestock program isn't very interesting to growers in Hawaii because it's a price guarantee versus cattle loss type coverage. This is a summary showing the participation in Hawaii through 2018. It shows the total policies as of February 2019 at the very bottom as 155. And I know for a fact that number is increasing, but it shows at the very far right, the loss ratio of 93 cents. And the USDA's Risk Management Agency's mandate requires them to keep the rates adjusted. So they're adjusting the rates constantly to try to keep that at $1.05. And you see, we're not really close to $1.05. So anytime that we see these loss ratios out of whack, I always recommend to growers and grower groups that they recommend or that they request lower rating or to have a rate review for their crop for the following year. This shows information about the crop participation and liabilities in Hawaii. And the information is also not as recent. It shows by acres. Part of that I can't see. By crop, and the whole farm revenue protection policy is a good catch-all, but there's very little participation in it. It's not showing any participation. I don't know. Oh, it does. It shows a small amount at the very bottom there. And I think it is because there is a lot of paperwork required. There's a Schedule F for 5 years that a grower needs to submit unless they're a new grower. So it's quite invasive. Requires quite a bit of calculating of expenses and revenue in order to come up with an approved revenue. Does anybody have questions?
I do.
Oh, you do?
Yeah. So what are the qualifications for someone to be considered like a limited resource grower?
We direct them to I think it's the NRCS limited resource grower calculation, like it's a self certification page.
Okay.
So we use the criteria that the USDA provides through that website. And I think it's NRCS.
NRCS. Okay. And from there, though, they can get certified. And if they are, then they could potentially get the fee waived?
They can get the fee waived. It doesn't waive the premium, but what it does is it waives that $30 fee. And what they have to do is certify on the form that the approved insurance provider offers through the agency. So I have the forms that a grower can sign to get the fees waived. But the fee is waived for the criteria stated on the NRCS website, and I believe it's like an updated indexed poverty rate. So it's regarding it. It includes consideration of the household income and the farm income. So they have to meet 2 points of criteria. Every year it changes.
Okay.
But the income levels are pretty low. So if they have off-farm income, chances are they don't qualify.
Okay.
A lot of growers do. They might, they might have a small farm that doesn't generate a lot of income, but if they have off-farm income, that's considered as part of their income for this purpose.
Okay. But the fee and the premium, I mean, they're tax write-offs as well, right?
Yeah, they're farm expense that can be written off as long as their accountant knows what they're doing. And but likewise, their crop insurance indemnities are considered income. So they need to be reporting that as income.
Okay. So as far as because you had mentioned ad hoc disaster payments.
Yeah.
So could someone potentially get an insurance premium payout and get the ad hoc disaster payment? Because I know with the disaster payments, they're generally much lower than an insurance payout, correct?
Yeah. No? And I don't know. It just depends on how the disaster program is designed. I believe that if they are receiving, I think they're getting right now because they're not they're not like crop insurance payouts. So I don't believe that we don't reduce the amount of our indemnity payout for any WIP program or anything like that that's been paid out recently. I know in the past, disaster payments were sometimes reduced by the amount of crop insurance indemnities. So that seems to be something that fluctuates along with other rules in the USDA. But right now, I know growers are getting both. They're getting indemnities from the crop insurance, and then they're getting whatever type of benefits they're getting through these ad hoc type programs. So they're not, some of them are tree replacement programs, that type of thing. So it just depends on the nature of the FSA program that they're applying for, whether or not it reduces their insurance benefits. But I haven't seen any benefits be reduced recently in recent years.
Okay, thank you.
You're welcome.
This is Stuart. If I could add something to that. In my presentation a couple back, I had mentioned that a grower needs to sign up for crop insurance or for FSA's version called NAP in order to receive or to be eligible for disaster payments. That's something that's changed. So, like kind of like what Bonnie is saying, these things keep changing over time. And one of the challenges for us as ag professionals or for the grower is to keep track of these changes. If you don't get the right one or unaware of it, you might miss out on something.
They always change. And if a grower asks me questions about any FSA programs, I direct them to FSA because I know the rules for crop insurance are exhaustive, and I know FSA's rules are also equally as exhaustive, if not more so. And so I don't pretend to be a clearinghouse for information related to that. And I always direct growers to that agency to get their questions answered. But I have had growers come back to me to get crop insurance because they needed to have crop insurance in order to apply for whatever it is they're applying for. And they have to have it for 2 crop years, 2 sub years at least, in order to keep their benefits through the Farm Service Agency program. So I am never certain if that's a requirement, if the linkage requirements are there, and sometimes they are, sometimes they aren't. And so, like Stuart said, a grower needs to make sure that I think it should be on the grower to go directly to the Farm Service Agency and find that out for themselves, because that's the expert on whether or not there's linkage between the particular program that they're applying for and crop insurance participation. Because it does change. I can't keep up with it. I can barely keep up with crop insurance. So I don't pretend to be an expert. I know there's farmers.gov that really is more of a clearinghouse of information, but I've gone there and looked, and it doesn't give all the details. It just kind of gives an overview of what's available.
Hey, Bonnie, are you able to give us a brief story of how crop insurance has helped a farmer in the past?
We have so many of those. we have claims almost every year. We don't need to see widespread losses in order for claims to be individually payable. And so a grower with just a small claim, and his neighbor may not have a claim, but because of the environment on his farm and because of all the different things that happen at different elevations, for instance, in coffee, or the different diseases that might happen if there's too much rain. A lot of growers have expressed gratitude that they have crop insurance, just because some of them are reliant on this income. It seems like the smaller the farmers are, the more they really are reliant upon the income of crop insurance indemnities. And it, along with any other benefits that they can get through some of these disaster programs, have helped. And then if you go all the way up the line, we've paid larger claims too, to larger operations. And I know that money keeps people employed and goes into the local economy. So as far as specifics, I can't really give like details about anybody in particular, but I know that there's hundreds of stories out there. There was one grower going to cancel one year, and he was a coffee grower. He just felt like he was paying a premium every year. And that particular year, I noticed his production was down, but he didn't realize. He goes, that just happens sometimes. And this happens a lot with Hawaii growers. They don't think they should be claiming for a loss, but when I see their production report, if we're not outside of the notice requirement time frame, then I do encourage them to go ahead and go through the process. And this grower was going through multiple things with his family. He said, we're just too busy to deal with the loss adjuster. And then I told him what I estimated the loss to be. And he says, well, maybe I will talk to that loss adjuster. And he told me later that the money came at such a good time because they had illness in the family. There are multiple things happening. And he is still a policyholder to this day because he realized he shouldn't be backwards about claiming losses. And really, I have talked to many that, you know, I look at their numbers and I say, hey, did you know you have a loss? And they go, yeah, but, you know, I don't want to claim I think we claimed 2 years ago. I don't want to claim again. And so I tell them that's what they're paying a premium for. So I always encourage growers, always look at your production numbers as they're coming in. And if you think they're off, even if you think they're off and you can relate it to something that's weather related or some other natural cause, to give me a call and we start the loss process. And so there's a lot of stories, and there are some that where growers weren't sure that the coverage was working for them and found out it did. So that was one that I feel like it's not like I don't like to lose clients. I don't like them to think, well, this coverage doesn't work. And the particular year where he was discouraged was the year that it really did help him out. And I think there are growers who pass on claims. I mean, mostly I see the production numbers before we're outside of a claim reporting period. But sometimes we are outside of it and we can't go back and pay a claim where we're outside of the claim reporting period. If it's more than 60 days past harvest, for instance, it's difficult for us to go back and actually do the documentation that the risk management agency requires in order for us to pay the claim. And they pretty much cut off claims at that point. So I always encourage growers, if you see anything happen during the year, to call your agent. Don't wait. You don't have to know what the end result is. Get on record as having the possibility of a claim, and then that satisfies their reporting requirements. Any other questions? Is this the kind of presentation that was this helpful? I mean, was this overview helpful? I know I covered more than just the Mac nuts and coffee, and I think there's another version of my PowerPoint out there that I was working on last week where I ditched some of those, but was that helpful to include them, or would you rather me get rid of those in this type of a environment? It is pertinent. I think the nursery is really underrated, the nursery policy. I would like to see way more nursery growers insured. It's hard to write. It's hard for me to write it, but I would rather see them insured than have a hurricane happen or a volcano cover their farm and not have coverage, because that happened a lot.
I have a question, please.
Okay.
Now, you just said that if they see something like an indicator of crop loss, and they will contact the agency to say, I may do it. So what if they don't do it?
If they don't have a claim,
or
if they contact me and say, I think something's up, it looks like our harvest is a little bit off, I'm not sure why. And what I generally do is ask them, can they think of any weather related cause? Because I generally have to put down some type of designated cause that's insurable to open the notice of loss. And so we get it, if somebody tells me they think their production's off, we open that claim. And if it results in no payable claim, there's really no penalty. They go through the motions of withdrawing the claim with the loss adjuster. It's not a lot of paperwork for them. The loss adjuster reviews the records just to make sure, has them sign off on a withdrawal, and that's it. Is that answering what you were asking?
Yes, thank you.
Okay.
Bonnie, I guess to follow up on the nursery one, that is for potted plants still, or has it expanded for flowers, as cut flowers as well?
It's not cut flowers, but it's for in-ground or potted in container wholesale nursery. So it's so cut flower operations are not covered. But if part of their nursery is sold for wholesale use, then they can still insure. They may not have their cut flower operation insured. But there's a lot of growers that qualify for the nursery policy, and there's very few that insure. That worries me.
Would cut flower be covered under whole farm if they need it?
You know what? I'm not sure. I haven't looked that up recently. I believe the answer used to be no, so I can look it up while we're talking, unless I don't know how much time you have, but I can look it up real quick.
I see some folks who deal with cut flowers, so yeah, it might be a good thing.
Yeah, okay. I'm looking it up right now.
And while you're looking that up, again, I just wanted to acknowledge our funding agencies, the Western Extension Risk Management Education Center with Washington State University, USDA and NIFA, as well as UHC-TAR. And to also remind everybody to please visit the Weebly website. It's there in the chat. We've been posting up the recordings for the different presentations, as well as other resources that come from the presenters. And to also help us provide feedback for these webinars, as well as maybe other ideas that you might have for future events, for the surveys that we have for each of these Train the Trainer webinars. And again, that's also in the chat for the link. Bonnie, continue with the cut flower question as well.
So I'm waiting now for the list to populate of the commodities that are considered covered under whole farm. And then on whole farm, we actually have until March 15th. So we have, now would be the time to apply, because it is a little bit, like I said, paperwork intensive. I wouldn't wait till March 15th because there's quite a bit of hoops to jump through. Some of those would be documentation of your pricing, documentation of your average yield. You kind of have to go through building almost like a separate policy for every crop that you grow with revenue outcome. And the revenue outcome, of course, is documented on Schedule F, but the price per pound has to be documented, for instance, on crops that are sold at farmers market. So it's pretty intensive to try to get that information together if it's not currently a crop that's reported to NASS, for instance. I see other crops. I see nursery greenhouse. So like greenhouse crops, and I know I've asked that question before. Flowers, cut flowers are listed. So they are insurable under the whole farm.
Oh, that's great.
Yeah, they're listed. And then flowers, others, what other flowers would be if they don't come under the definition of cut flowers, I guess. Flowers potted, flowers other. Yeah, so they're insurable under the whole farm policy. And really, I think there's lack of participation because there's lack of information. I feel like it's a difficult program to write. It's very time intensive for me as an agent, and it exposes me to a lot of liability if I get something wrong. So a lot of agents shy away from it. If a grower is willing to go through the steps to do all the documentation, I'm willing to go through the steps to try to get them insured and get all the questions answered that arise when we build one of those policies. Underwriters come back with multiple questions. So there's quite a long underwriting period that follows the submission of the application. And I have a lot of growers that just shake their heads and say, we can't go through that. And so I understand it's time consuming and not everybody has time to go through that. And so I would love it if an agent who specialized in whole farm, I was hoping that Shannon was writing in Hawaii, because that's really what we need. Those people who do it all the time, every day, are the ones who don't have to look up the answers to the questions. And I just don't think there are any here that are writing it as a specialty. There are some here in California and the West Coast, but nationwide, the whole farm policy is not participated in at a very high level. I looked at the statistics a year ago, and there was like 700 policies nationwide, which shows there's not a lot of interest in it for those reasons that I stated. But it's there. I mean, it's there if somebody needs coverage. Well, that's all I have. The one thing that was a hot topic this year was, and still is, of course, is the coffee leaf rust and how it works with our tree policy. And so if you noticed, there's no ability to chainsaw trees due to rust to control the disease. And there's no coverage for that. If they did that, and we agreed to let them do that, and we told them there's no coverage on your trees, they could have coverage on their cherry side. So if the crop's set, they see a really bad infection of CLR, the inspector's out there and the grower says, I'm just going to cut these down and start over, or try to, get a hold of some resistant rootstock when that becomes an option, then we can release it, but the grower would receive no payment under their tree policy for that cause of loss, because coffee trees have to meet a definition of dead, meaning they have to have no live wood in any of the tree, or they have to be toppled over with the roots exposed. So there's very strict definitions on how we can pay out coffee trees, and it's not going to help with CLR. The crop insurance policy will, though. So if they have a reduction in crop due to CLR, that's a covered peril, as long as they've done what they can to control it with known approved control means. So we had a lot of questions about that this year. I had a lot of people sign up, but some of them just left the tree policy alone. They said, we're going to see how it goes for a year without it. I encourage everybody to sign up for both, but some growers just signed up their coffee cherry, thinking that the biggest risk was loss of cherry versus loss of trees. I don't know if anybody knows. Do you guys know what's going to happen?
I don't at this point, Andrea.
Yeah.
You're probably right that the loss of cherry is going to be more important in these next coming seasons than the loss of the tree. Tree loss normally takes a bit longer, and you'd have to neglect the tree, which from what I understand, you still have to implement IPM in order to be covered for pest and disease. So
You mean on crop insurance?
yeah,
To be covered.
IPM recommendations out there, the grower would still need to be following that. So if they are, more than likely the tree will not die. Unless there's
Yeah, they have to be using whatever control means that is available. I don't know if IPM is the phrase that we use for it, but they do have to be using recommended sprays and control measures that are recommended. So if that's the phrase that it comes under, that's fine. But the one thing about our tree policies is carryover coverage may not be covered. So if once they're insurable, though, we're not going to cancel them for having the disease. I've verified that once with the claims supervisor, but I feel like that's an ongoing definition that has to be addressed. And so right now, if they're in the program, they're covered. If they have disease next fall and they want to sign up, chances are they can't get coverage.
Got it. Thank you.
Well, thank you for inviting me to do this. I hope it was helpful. If anything isn't clear, please let me know. I'm providing the PDF of the PowerPoint to Shannon. So if you would like to request it from her, you can. I guess it gets uploaded anyway. So
Yeah, Andrea's the one who uploads it. So if you could send it to her,
okay.
that would be
If you need me
great.
to make changes to it, please let me know, because there's a little bit more